Joining us now with his names that could outperform in this new energy environment is Chase Mulvehill. He's a senior research analyst at BofA Securities. Chase, it's great to have you. Let's start with Baker Hughes. Who do you think could be some of the standouts here?
Yeah. Thanks, Kelly, for having me on the show today. Some of the standouts that we think that are going to benefit, from an increase in LNG demand, really over the longer term, is going to be Baker Hughes and Chart Industries. They make a lot of the equipment that is needed for liquefaction and for regas. And so as the world needs, more LNG over the next, 5 to 10 years, as Russia, continues to kind of wean itself off as Europe ends up weaning itself off of Russia gas, that's going to be a big positive. You're going to see a lot of order growth and installed capacity additions over the next 5 to 10 years. And
Chart may not be a familiar name to our audience. Its ticker is GTLS. Your target price there, $195. So a decent amount of upside for Baker Hughes, which was our mystery chart going into the break. You have a target price of 44. I guess that raises the question of how much of the prospects of this European deal are already priced into these stocks, given the rallies they've had this year.
Yeah, they definitely had nice rallies, but we think that there's still, more upside. And look, the benefit of this with, the LNG with both Baker Hughes and Chart, you do get the juice for LNG. I mean, over 50% of Chart's, revenues are generated from, natural gas and LNG, and about a third of Baker Hughes is. But if you think about what Europe is going to do when it tries to replace Russia gas, it's going to be with LNG and also with renewables. I mean, both of these companies, have, renewables exposure. And so when you think about hydrogen, when you think about carbon capture, both of these companies have meaningful exposure. And so they're going to have both sides of the coin here. They're not only going to have LNG, but they're going to have renewables exposure on the European side as well.
And we know that's going to be a huge boon for ESG investors, younger investors, and so forth. What about Williams and Kendrick Morgan?
Yeah, when we think about the LNG and where it's going to come from, the U.S. is going to be a big supplier of incremental LNG. It already is a big supplier of LNG today. But when we think about, we think that by 2025, you're going to see at least 150 MTPA of LNG projects sanctioned. And then by 2030, you could see 250 to 300 MTPA of sanctions. A lot of that's going to come from the U.S. And so if you're going to have to increase LNG exports, you're obviously going to have natural gas, you have the feed gas here in the U.S. And so that's going to benefit some of the midstream players. I mean, our favorite is Williams, but Kinder Morgan is also exposed on the midstream side. They're the two largest natural gas exposed midstream companies.
My understanding is you had a neutral on Williams. Have you changed that to a buy?
No, we have a buy rating on Williams. Our neutral was actually on Kinder. There's some offsets there with Kinder that kind of offset the benefit of the LNG over the longer term. And so our favorite kind of LNG play is really Williams on the midstream side.
Awesome. All right, Chase, we'll leave it there. Thanks for calling in. We appreciate it.